Hello and welcome to today's morning report on Wednesday the 7th of January with me, Rich Perry, market analyst at Handtech Markets. The European trading session has actually started reasonably positively, and that's come with a slight element of signs of improvement in risk sentiment. Couple of indicators really that I've been looking at. Gold is lower, the yen is also lower, and these two are the key safe haven trades that the market has certainly been going towards in these recent days of the flight to safety. Now, that is not to say that the bond yields are still under pressure and the oil price is still falling. So, just sort of a bit of a dichotomy really going on in those safe haven trades that we're seeing at the moment. So slight improvement in the European equities. DAX up 30 points, FTSE up 30 points, so nothing too major, certainly in light of the significant selling pressure we saw on FTSE recently, but just a very early signs of a bit of support, but it really is fairly weak at the moment, and there's no major sign that it's going to be any significant move to the upside again, but still it's something to go on. The Dow and the S&P have closed lower, or certainly Wall Street has closed lower for a fifth straight day, and that is certainly showing the signs of strain that Wall Street is seeing. Now, what we've got at the moment is the VIX that continues to pull higher, and that certainly is reflecting the fear that is evident in these equity markets. Fund managers certainly opting for short protection on their portfolios, and that is why the VIX is pulling higher. And it's only really when the VIX starts to fall away is when we'll see the equity markets start to rally again. There's a very strong negative correlation between the VIX and the equity market. In terms of forex markets, well, the dollar is stronger again today, and the big reason behind that is the Japanese yen, which is around about 0.4% up on dollar yen. So in terms of the yen being weaker. And we've also got the euro weaker as well. Now, the euro is the key factor that we're looking out for today, because we've got the Eurozone flash HICP data, the inflation data, at 10 o'clock. Now, this is expected to show that the Eurozone is going to fall into technical deflation, with a minus 0.1% expected on inflation today. Now, that certainly will reflect the falling oil prices that we've seen, and that's starting to come through in these European inflation data, and will put pressure on the ECB to act with further monetary easing at its meeting on the 22nd of January. But certainly today, how this inflation comes out could have a big impact on the euro. Euro remains under big pressure and has been in recent days. Now, the other data we've got to look forward to today is we're now going to be starting to look forward to in the afternoon towards the non-farm payrolls on Friday, and the first sign of that is the ADP employment report at 1:15. 226,000 is the expectation there, and that would bode fairly positively for the payrolls data on Friday. The ADP number was 208,000 last month, and a nice little improvement there in the ADP number would be good for non-farm payrolls on Friday. We've also got the trade balance for the US at 1:30, and also the Fed meeting minutes at 7 o'clock tonight. Fed meeting minutes just giving further information on to the last Fed meeting in December that we had in the middle of December. So a little bit more information there, more meat on the bones as to how the Fed is thinking in terms of its monetary policy. Now, my chart of the day. I've been talking about the gold price, so it's probably a nice opportunity to look at silver, really. Silver has been rallying. This is quite a long-term view of the silver price, and look at this big floor that we lost, 1860, around that 1860 level, towards 18 figure to 1860 is a big floor that we lost, and that is now going to be the key resistance on any sort of attempted rallies. But we've seen some improvement in the gold price, but not really too much in the way of improvement on the silver price. Yes, we've broken this downtrend that dates back to July last year, so a 6-month downtrend has been broken, but it sort of isn't really showing too much to the upside as yet. The improvement has come with a slight breach of resistance at 1645. Now that's sort of moved into a slightly more of a positive outlook, but you would say that this is still simply just a bit of probably a 10-week consolidation pattern that we've got going on here. Nothing really more than that, and I think it would certainly need to have a breach of that 1733 resistance and ultimately a breach of 1780, I think, would then confirm that that improvement in sentiment. But certainly if you got a move above 1733, that would complete a nice base pattern, you could argue. But I think that looking at these momentum indicators, there's nothing really to show that there's a medium-term improvement. It's just a near-term pickup that we've got. The RSI remains below that 60 mark. Certainly that 60 point that what we saw in mid-December was where the silver price rolled over again. It's in the mid-50s at the moment. MACD lines are still negative configuration underneath neutral, and the stochastics are just showing this near-term improvement. So it's a near-term situation that is showing signs of improvement, but we're still within this big consolidation pattern here over the past 10 weeks, and I don't think at the moment there's anything to suggest that it's going to be changing, but we'll see what happens. Certainly the gold price has improved, and I'll talk about how the gold price is looking in a bit, but certainly silver has got a lot more work to do to the upside in order to suggest that the bulls are getting control. So I wish you good luck in your trading today, and I will speak to you later. Thank you.